So if you're a professional in the PSU sector, you know that stability isn't just a job perk, right? It's a whole mindset. And when it comes to investing in something like real estate, that mindset usually leads to one golden rule: play it safe. But what if safe isn't the whole story? Today, we're going to explore exactly what lies beyond that.
Playing it safe feels so responsible, it just feels right. But could that very approach, the one that's supposed to protect you, actually be holding you back from real financial growth? Now, this isn't about taking wild, reckless risks. It's about understanding the huge difference between what feels safe and what is truly financially smart.
All right, so to figure out a better way forward, we first have to understand where this safety-first instinct even comes from. What is it about the PSU world that makes safety such a powerful, almost automatic driver for our decisions?
Just think about it for a second. Your professional life totally shapes your personal one. When you spend decades in an environment with fixed salaries, a predictable career path, and just solid job security, well, it naturally trains your brain to value certainty above almost anything else. In that world, uncertainty isn't just some variable, it feels like the enemy.
And this goes way beyond just work, doesn't it? That mindset gets dialed up to 11 by the sheer weight of personal responsibility. I mean, when you're thinking about your family's security, your kids' education, healthcare, your own retirement, the main emotion driving your investments isn't excitement for what you could gain. It's the fear of making one single wrong move.
So this combination is incredibly powerful. You've got the stability of your job on one hand and the huge weight of your responsibilities on the other. And what happens? Safety becomes the only filter you use for big decisions. At that point, it's not even about a financial calculation anymore. It's about finding that feeling of emotional comfort.
But here's the twist. An approach that feels so responsible, so right, can actually come with some serious hidden costs. So let's pull back the curtain and look at the real financial risks of only playing it safe.
So what does a safe property even look like? Well, it usually fits this exact profile, doesn't it? It's in a place that's already popular, an area that's fully developed, from a big-name builder everyone trusts. It checks all the boxes for a good night's sleep.
But here's the catch, and it is a big one. An area feels safe precisely because all the development is already finished. But think about what that means. If the main development is done, the period of rapid price growth, that big upward curve, that's largely over too. So your money is protected, sure, but it has stopped working hard for you.
And this brings us to the silent killer of wealth: inflation. You might see your property value go up by, say, 5% in a year, and you feel pretty good about it. But if inflation is humming along at 7%, you're not actually growing your wealth at all. In real terms, what your money can buy is actually shrinking year after year.
And this is how a really dangerous cycle starts. You invest in a safe asset, but it underperforms. You know it's not beating inflation, but the thought of selling at what feels like a loss is just too painful, so you wait. And while you're waiting, your capital is trapped, locked up, unable to jump on much better opportunities that come along. That single safe decision can lead to years and years of financial stagnation.
Okay, so if safe has all these hidden risks, what's the alternative? The good news is, it's not about becoming some high-flying risk taker. It's about making a shift from just seeking safety to investing with clear, focused intention. The difference between these two mindsets is it's stark. Safe thinking relies on what everyone else is doing. It's external validation. But smart thinking, that's completely internal. It starts by asking, why? What is the purpose of this investment? How will it perform over the next decade? Is it going to beat inflation? And what's my plan to get out? See the difference? It's the shift from being a passenger to being the pilot of your own financial journey.
And this right here is the core message. It's really worth letting this sink in. Your instinct for safety is not wrong. In fact, it's a great starting point, but it just can't be the finish line. True financial security requires another layer, a layer of smart, strategic thinking built right on top of that instinct.
And let's be super clear, making smart decisions isn't about gambling or chasing some hot, risky trend. It's actually the opposite. It's about doing your homework, having crystal clear goals, and making absolutely sure every single financial move you make is intentional.
Okay, so how do we actually put this into practice? Let's talk about a practical framework, a new set of questions you can use to guide your investment decisions from now on.
The whole goal here is to replace that one single question, is this safe, with a much more powerful set of questions.
These new questions force you to think about purpose, your long-term goals, flexibility, and, critically, real inflation-beating growth. And you know what? When you have clarity on these points, fear naturally starts to take a back seat.
This really gets to the heart of it all, doesn't it? Protection is passive. It's like putting your money in a vault and locking the door. But growth? Growth is active. It requires a plan, a purpose, and a really clear vision for what you want your money to do for you.
And that is the ultimate takeaway. Playing it safe is all about protecting the comfort you feel right now. It's an emotional decision that serves you today. But smart, strategic planning, that is what actually builds and secures the future you really want for yourself and your family.
So, I'll leave you with this to think about. Take a hard look at your own investments. Is that property you bought because it felt safe? Is it truly doing the hard work of securing your long-term future? It's a question that is absolutely worth asking.